Good morning, traders. Thanks for joining me again on another Trader Bite. It is 8:04 a.m. Chicago time on Wednesday, the 13th of December, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning on the broadcast, you're going to hear a lot of hammering, a lot of shuffling of craftsmen here in the house. You may also hear cats meowing. I'm just adding a lot to the broadcast here to enhance it. Actually, no, there's construction going on, and people are coming in and out, and the cats are freaking out in my office. So just bear with it. It's one more day, and they're done. The market stance this morning, the dollar took a bit of a hit this morning, down 21 basis points. The dollar index showing negative 0.195. The leader this morning, again, is crude oil. Crude at 57.53, up 39 cents, 0.68%. Overall, mixed market this morning, seeing money going into the Japanese yen and gold, which is speaking of safety. Gold is down to 1246.6. It's up today 0.39%, but it's much lower than it was just a few weeks ago. Also, the bonds are holding fourth place on my leaderboard, up 0.35%. This is partly caused by the CPI release that came in line, but also unemployment in the UK was reported at the lowest since 1975, plus inflation is higher than expected there. So expecting the BOE to be open to raising rates. Today, the key thing you have to remember is the FOMC announces. The FOMC is expected to report an increase of 25 basis points. That's what the market's expecting. The announcement's coming out at 1 o'clock Eastern, 2 o'clock Eastern, 1 o'clock Central. Very, very important. If the market does not get 25 basis points, we may see some volatility there. So, again, FOMC, 2 p.m. Eastern U.S. time today, expecting an increase of 25 basis point on the lower and upper bound. That's the key announcement for today. Other than that, we're looking at gasoline, crude, and distillate inventories coming out at 10:30. I don't have estimates at the moment. And then we have Fed Speaker Yellen at 2:30 Eastern time today, the news conference or the conference call after the FOMC announcement. So that's what we've got. Let's take a look at what we expected on yesterday's broadcast. So this is from yesterday. Let's turn this off a second. This is from yesterday. The primary scenario was for the market to open in a gap and to test down, but then push up. Wow, those guys are really banging away upstairs. To push up, and then the key target for the day, as discussed yesterday, is I expected a low of around 63 or so, and then I expected a high of about 71, 72. 71.50 being a measured move as indicated on the flex levels. If you have Linsoft's IRT, then you're getting those flex levels automatically from my server, and it shows right there 71.50. That's what we're looking for. That's the primary scenario. I'm trying to get away from this word hypothesis. It makes it seem all theoretical, but that's the key trade of the day. The secondary trade is that we do push up into the 72 area. The 72 area, and then looking for the market to drop back into 63. So I'm looking for the inverse of the primary scenario, and that's where I'm coming from. So here's what we got, the big reveal, right? So here's how things looked. There it is. We dipped down to where? 63. right? 63, right on the dot. Where do we get to? We get to 74. So we get a very, very predictable auction. It does happen once a week or so. Now I'm being negative. We do get the responsive selling back into a base. This is what we're looking for. 62.5, 63. Remember, I outlined this yesterday. Then I'm looking for the push into 71.5, 72 as discussed. Looking for it to consolidate, and then looking for some selling on the close. Exactly what was expected. 73 was the expected level. Not 73. 71.5, 72 was the measured move. Again, here's what it looked like on the hypothesis right here on the scenario. There it is. 71.5. Base at 63. Okay, so that's what we've got. And then, of course, as we push, and I didn't draw this on here, I should have. As we push, we tend to reverse on the close. I think you probably have seen that a lot in the last few scenarios. Here it is, selling. Then we push on. We level out on the close. Participants tend to reduce their positions into the session close. That's what we got. We did have a local double bottom. Remember, it's a local double bottom. It's not a double IB low, so it doesn't fit the 83% statistic. Past performance, not indicative of future results. It doesn't fit that. It shows local weakness, but I don't trade based on that little weakness. Now, if it happens on the IB high, IB low, high a day, low a day, it's a different ball game. A local double bottom does show short-term weakness, but it's not enough to hammer on it, right? So if I decide to take that, it'll be an eighth of a position or a quarter of a position because I don't have any strong stats on that figure. So that's what we had yesterday. Now, what do we have for the overnight? Here's the overnight. The overnight session shows okay volume, not so amazing given the fact that we're rolling. Without the roll, I'm guessing last night's or this morning, early morning session, the current session would have been around 90,000, which is lower than expected. We expect this to be in the 200s as far as volume. So participation, in my opinion, was pretty poor in the overnight session. Yesterday's overnight session was in line at about 220, 270 or something like that. But this current Globex session is not well participated. We pushed down into the prior Monday's point of control for a quick test during the off hours, and then we just rallied right off of there, and the market's making a pattern that shows that it's likely to push through the 73 today. So the overnight session has explored lower and has shown a pretty decent excess low on the overnight. I don't consider that too valid, but there's been quite a bit of participation in the overnight. As you can see, the overnight inventory has been mostly short in price. Here's yesterday's close. Here's where most of the inventory has spent its time on the negative side, on the short side, and the delta is showing selling. Remember, delta is not so reliable during the rollover period, okay? Because, well, I explained that before. Calendar spreads affect the way we use delta. And so on the overnight session, we see this wanting to become responsive back into the VPOC, but probably gunning for that 72, 75, 73 high. What we ended up with yesterday is actually a weak high. So this is a pretty weak high. We didn't see a one-tick test of the high. We saw a lower high, like I've outlined a lot of times. This is a failure pattern that I use, lower, high, and then we push down. And that's what we got yesterday. But overall, we get a weak high with the point of control in the upper quartile of the range. This is likely to push us higher, in my opinion. Okay, so this is what I'm looking for this morning. Just real quick, I'll expand this. This is the response we got. This is the response we got. Oops, hang on. This should be come down one so I can draw on it. This is the response we got on the CPI. We ended up flushing down a little bit, and the market's pushing higher. Quite a few offers up above, and the market's been steadily lifting all morning. So you could see from the restart of the session, from yesterday's session till now, the delta on the small lots and the large lots is still fairly positive. And so we're starting to push into the all-time high recorded right there in the cloud notes. And so overall, this looks very positive for buyers. So to me, it just seems like we're ripe for a push higher based on the order flow and the depth market. What am I expecting for today? This is quite a production. Look at this. Remember, I'm going to gloat. Last Wednesday, I did say that be cautious. This is bottoming out. It's bottoming out, and I'm expecting it to start making its push to new all-time highs, which we got yesterday. I invite you to go into my YouTube and pull up last Thursday morning's recording, and you'll see that this is just trading is not easy. Okay, I've said this for years. I've said this to my prop traders since 2003. It's not easy. It's simple. It's not easy. And so this is, however, a very clear layup, in my opinion. With defined risk, it really is quite predictable, the behavior that we saw here last week. Now, with that being said, we have a clear positive channel. Remember, I talked yesterday about one-time framing up on a daily, a lot of strength on the buy side. We're gapping up, a minor test expected, and then I'm expecting it to push higher. Same pattern this morning. So when we look at the next measured move up, way up there, 30 points, 38 points for a measured move. It's almost a double, actually, in a 2708, 2710 area. That's our next big target. But for this morning, I'm expecting the same pattern. Open auction, small dip, push, go to VPOC, then drift into the FOMC. Okay, take out, I expect us to take out that double top right there, which was missed by a tick. And then depending on what the Fed does, if it raises rates by 25 basis points, the expectation is for a quick dip, and then the market's expecting that news. If it does not, I'm expecting it to flush up and then go sideways into the close. If they do anything but raise 25 basis points, I'd be shocked if they raised 50 basis points. We're looking for a pretty harsh dip, consolidation, and then back up over the next week or so. So overall, be careful. FOMC today at 2 o'clock. Be cautious. Do not hold on to a position that does not give you coverage, unless, of course, you're a swing trader and that's your plan. Don't hold on to a position and gamble into that number. But the primary scenario is just that, is push down, drift into the point of control, and then just a drift upwards until the FOMC announcement. I expect it to blip down and then continue higher in 2 out of 3 scenarios. Okay, the secondary is we continue to move. This is we're pushing the overnight high. We continue to move and grind higher, push out and get a new all-time high, then consolidate pretty much a 5 4.5, 5 point range this morning. Very, very tight. Remember, quad witching Friday, FOMC today. And then we end up going, again, same thing, dip, push, or dip, way down, consolidate, push on the FOMC announcement. My time is up. It's 8:19 here. Started 4 minutes late, so that's 15 minutes. I'm going to leave you with that. Again, remember, your job is to identify an edge. And an edge is very simply a probability. So statistics, a probability that one event is likely to happen over another. Define your risk, put on the trade, and with the understanding that every trade has a 50-50 outcome, unavoidable. It's either a winner or a loser, and you're managing a risk. From the time you click to get into your trade, you're just a risk manager. That's it. And then the trade plays out or it does not. And if it doesn't, it's an indication that either your timing is off, your stop is off, or your entire hypothesis or context is not working for the market. It doesn't mean that you're wrong and you're a terrible person and you should quit. It just means that that particular time, the probability did not work for you. The outcome did not work in favor of the probability that you're trading. Okay? Good luck, and I'll catch you tomorrow. Take care.